Welcome to our webinar, Are You Getting All the Credit You Deserve? Employee Retention Credit, ERC, presented by Chuck Thornton on February 22nd, 2021. If you would like to collaborate on a webinar at no cost for your colleagues or with your trade association, please call our office for details or send an email to info@rcthornton.com. We would love to work with you on your business topic of interest. It is my pleasure to introduce to you our speaker, Chuck Thornton of RC Thornton and Associates CPAs. Chuck works extensively in the tax area. He is an author, lecturer, and frequent webinar presenter. His firm's mission is to help clients achieve financial success. That means saving on taxes too. Chuck's background includes being a CPA, personal financial specialist, charter life underwriter, and certified financial planner. He is a graduate of New York University with a master's in taxation. Please don't hold this against him, but he did work for the IRS a long time ago. Chuck is also owner of RC Thornton Financial Solutions, LLC, another CPA entity specializing in investment planning. Welcome, Chuck Thornton.
Well, thank you, Kit. Thanks for that introduction, as you always do. And by the way, we have a surprise speaker coming up here later on, but I'll introduce that speaker when we get to that slide. So anyway, we're going to talk about the employee retention credit. The punchline is this. If you have employees, if you're a business owner, you have less than 500 employees, and if your volume has dropped some degree between now and 2019, and whether you got the PPP loan or not, you might be a candidate for this. So if you're just an individual without a business, this probably would not be of interest to you. So here's the overview. We're going to talk about this credit. It's a little bit of surprise credit because back in 2020, we didn't think anyone was going to be getting this credit, but with retroactive changes, they are. Now, it turns out you have to have a qualifying business, which is one of the things I just talked about, and any business will have qualifying wages, and there will be a catch-up provision for 2020. We're going to talk about how you use payroll process service providers to do this, some next steps that you would take if it looks like this is going to work for you, and some of the caveats about doing this. I would suggest that probably quite a few clients will qualify for it. Our record so far on this is about $140,000 worth of credit that people have coming to them. I would say service providers, dentists, things like that, $20,000 to $25,000. So we're not talking small numbers here. We're talking about something that's pretty significant. Now, there's two sets of rules. So I want to get you thinking calendar time here. March 12th to 2020 to December 31st, 2020. Now, the March 12th is when the last CARES Act passed. That's why that March 12th is in there. To December 31st, 2020. The credit existed, but it wasn't as juicy as it is for the period January 1st of 2021 to July 1st, 2021, or say June 30th, if you like to say 2021. The numbers are much, much higher, much more impressive. But hey, if you can get a refund for 2020, even if it's smaller, why not do it? Here's just a general description of the credit. If you qualify, many of you will, it's a refundable credit if you not have taxes offset, which means it's a refund is what the punchline is. They offset against some taxes, and if you don't have enough taxes offset, they'll send you a check is what they'll do, or they'll let you use it as a credit carry forward. So that's what refundable means. For March 12th to December 31st of 2020, the credit could be 50% of the first $10,000 of qualifying wages per employee. I'm teasing you here. What's qualifying wages? We're going to come to that. So therefore, you might be able to get $5,000 worth of credit. If you had 5 employees, who knows? You might get $25,000 worth of credit. For January 1st, 2021 to July 1st of 2021, the credit can go up to 70% of the first and second quarter wages up to $10,000 per quarter. That means quarter 1, $7,000, quarter 2, $7,000, total $14,000. Compare that to 2020, which was 5. Of course, the juicier one is the current year. So the maximum credit for 2020 is $5,000. 2021, it could be $14,000 per employee. And the theme of it here is that you're a small business who's continued to pay their employees during this COVID issues that were going on, so certain circumstances. And because of that, whether they perform services or not, you actually will get a credit. They're subsidizing you for being a nice person is what they're doing. General description of the credit. Why didn't you take this in 2020? Why didn't we talk about this 2020? Is it too late to do it? Actually, we did talk about this in all the webinars that we had coming out. We talked about the employee retention credit. However, it turned out that basically a lot of people were not going to be eligible for this because they had PPP loans. But now we're going to talk about what is a qualifying business, and this is where I'm going to introduce my secret speaker here we have here. Actually, her name is Tina Lawson. She's a CPA. She has been here with us for over 3 years. She has quite an interesting background. A lot of people in the CPA business just go from college into CPA business, then they maybe go to industry. She's done it the other way around. She was, first of all, I want to share with you, she was in the Navy. We joke about that because I was in the Army, and you can guess all the jokes we have about Army versus Navy, but she was in the Navy. And then when she got out of that, she basically went and got her accounting undergraduate degree. Somewhere along the line, she became an entrepreneur. She actually owned a business, a retail business, for, she tells me, 10 years, which is pretty impressive there also at the same time. From that, she went and got her master's degree in accounting and has been in the industry for a while. But so what's interesting with Tina here is she actually has experience on the front line that a lot of people do not have in public accounting. So how about if I introduce to you, Tina, and you're going to tell us all about the government shutdown orders and a few other things too.
Thanks, Chuck, for that great introduction. I actually love working with Chuck, even though he is former Army and I'm Navy, but that's okay. So basically, you can't talk about tax credits without going through some IRS definitions. And the one we have here on the slide is the definition for the qualifying business and the government shutdown order. It's a really broad definition. Specific, to the COVID-19 situation, and but it's so broad that you can add in, the crux of determining if it's a qualifying business, if your business had supplier backlog, if your business did business in other states and maybe they were considered an essential business in Arizona, but in the other state they had a different rule regarding essential business. And also whether your business whether your business was fully or partially shut down. So maybe you think your business was considered essential. However, there are other factors to consider regarding the qualifying business concept here. So were normal work hours changed for the business? Were suppliers impacted? If considered an essential business in Arizona, like I touched on the last slide, were your operations in other states considered essential? And the different states determine that differently. So to determine the potential credit available for your business, we've determined if you had a qualifying business, we will focus on two big questions. And they are, were your operations fully or partially suspended due to a governmental shutdown, mandated shutdown? And if so, what was the time period for that shutdown? Going a little further on the qualifying business, we've mentioned this a little bit. Did your business have supplier backlog issues? We've seen businesses that were unable to get supplies. when did you experience the impact from the supplier backlog? Were out-of-state business operations partially suspended due to the governmental mandated shutdown? And if so, we want to know, how long was that period? However, there are limitations on the qualifying wages, and so basically they are only the wages during the shutdown period are to be counted, not all of the wages. So there are two time periods. There's the I think Chuck touched on earlier in the presentation. There's the prior year timeline, which is the 2020 timeline, and then the other timeline is the current one, the 2021 timeline. There's different rules for each of those timelines. For the 2020, it's regarding the gross receipts reduction. If you had a 50% reduction in any quarter in 2020 by 50% or more compared to the respective prior quarter in 2019. And so the rules changed a little bit for 2021, and they changed that percentage reduction. They actually decreased it to only 20% reduction. So you have a bigger chance of qualifying as a result. And so that is comparing the 20% reduction in either quarter starting January 1 through July 1, and with a respective quarter in either 19 or 2020. So the gross receipts is basically just a test. It's different from gross income in that gross receipts includes an add back for the cost of goods sold to gross income to arrive at the gross receipts amount. And then there's another part of the gross receipts test, and this is based on the accounting method that you use for your tax return. So if you use the cash basis, then your gross receipts is based upon your gross receipts, just that. If you're using the accrual basis, then your gross receipts are determined based on the accrual basis. So just to go a little bit deeper into this gross receipts test, we just kind of came up with a few general comments. And so this gross receipts test is just basically a mathematical test. It's not a subjective one. We could, for instance, have a 20% cutback in gross receipts in one quarter and yet have more profits than before. So how difficult business is, lack of profitability or not, it's simply just that. It's only a mathematical test. So the next part talks about constructive receipt, and this is a big one. Chuck has a comment about constructive receipt that he wanted to provide to you all.
Okay. Thank you, Tina. Thanks for that presentation. I'm just going to recap a few things Tina said, and Tina, jump in and comment as you would like to do this. There's two tests. One is a cutback test. When I say cutback, your cutback is volume, but the other test is basically, was there certain government orders that made you terminate or partially terminate your business? I'm going to give you a couple examples. Ducey in Arizona, I believe, I could be wrong on my dates, but roughly I think it was March 12th or 13th to May 1st, he had a shutdown order for a lot of businesses. He broke them into essential and non-essential. Can you believe the CPA firms were essential? Isn't that something? So we were essential people, so therefore we did not qualify. However, let's say we were not essential. Then the next question was, could we have teleworked at home? And the answer is yes. So we would not have qualified under the governmental rules at all. However, let's think of a few professions. Dentists, as an example, they were subject to shutdown orders, and there's no way in the world they're going to clean teeth at home through the computer. So that hits that group right smack on the button between March 12th to May 1st. Now, can you also qualify if you had a cutback in gross receipts? Yes, you can. Maybe you came back from general operations, you caught up a lot, and you took some vacation the last quarter, and your volume dropped 20% or 50%, then 20%. You may well have done it. There's a labyrinth of rules on this that you might be eligible. The most common one are the restaurants who only had takeout orders, or they had social distancing, which they still have now. Those are partial terminations. And so partial termination from a governmental order, or you had a cutback, and the 2021 cutback seems to be a lot easier, doesn't it, Tina, compared to the 2020, because you only need a 20% cutback in the first quarter of 2021, whereas 2019 you had to have a 50% cutback. I don't know why they made it as difficult, but it was more difficult last year than it is this year. Okay, constructive receipt, Tina left us there. Hey, here's a clever idea for 2021. Why don't you just hang on all your deposits in the month of March, throw those checks in the drawer, and make sure your gross receipts are 20% less than what it was this time in 2019. No, that's constructive receipt. When you have the money, it's available to you. You're the one who just set it aside and decided not to access it. There's a doctrine called constructive receipt, and that would be included in your gross receipts at the same time. So don't go holding your checks. That's the first question people ask. This is pretty easy, I think, to do this. Okay. Okay, qualifying wages, what do they include? From March 12th to March 31st, if you have wages for the employer of less than 100 full-time equivalent employees, which I will not get into, for people who did the PPP loan, that's when this FTA concept came up. The key thing is whether they're providing services or not. If you're over 100 back in 2020, then it had to be for not providing services. So keeping them employed was important if you're under 100, whether they perform services or not. But over 100, they're saying, well, gee whiz, if you want to pay them just out of the goodness of your heart, but you don't expect services, we'll let you take it, but otherwise you won't. Now, January 1st to July 1st, 2021, the threshold has been raised to 500 FTA employees. By the way, some people may have had PPP loans where they said that each location counted on its own. So maybe the company had 520 full-time employees, but maybe they only had 35 at each location. That rule does not apply here. So therefore, it's 500 company-wide. By the way, you also include health insurance in there too at the same time. So if your wages were $6,000 and your health insurance was $3,000, then your qualified wages are effectively $9,000. Wages paid to related parties where the owner owns more than 50% of the company, the wages do not include that. You can confuse that with a PPP loan. You were able to use compensation to owners. You were able to do compensation related parties. And so it would seem like, why wouldn't it be the same? But as we whittle through the law, there's a reference to a section that says basically, nope, you can't do that. Now, I want to caution you on this. If you and I own exactly 50%, then we can take the credit. If we're not related, we're not brothers, fathers, sons, or whatever the case may be. But if I own 51% and you own 49%, we're not related, then I cannot take it because the buzzword is more than 50%. You still could take it at 49%, but I cannot base my credit because I'm more than 50%. Wages are exempt from FICA tax. If they're already getting a benefit somewhere, like your cafeteria plan basically is exempt from FICA tax, you would not be able to include that. Another one is, again, qualifying wages do not include proceeds of the PPP first or second draw, which are used to reimburse wages under the PPP forgiveness. So remember, last year they came out and they said, oh, you can't take this credit if you had the PPP. Now they modified and said, you cannot take the credit on the wages only to the extent you use the money for the PPP to pay for those wages. And as you all know who got the PPP loans, there's a forgiveness of where you're supposed to use 65 or 60 60% of your revenue for basically wages and health insurance. So there's a labyrinth here. Let's say that you had a government shutdown March 12th, but you got your PPP loan May 25th. It would seem between the March 12th all the way up to the May 25th, you did not use PPP money to pay the wages, and it would seem like if you otherwise qualify, you get the whole credit. Then if you did your PPP loan application and you did it 60%, it would seem to me that you would be able to get the 60% for the remainder of the period. Now, some folks have gone ahead, not knowing this rule is even going to exist, went ahead and filed for the PPP loan using a 24-week period. Remember, it was going to be 8 weeks at first for the people who got this loan, which is most people. And you might say, what the heck? My wages took care of all of it. Why even bother to list all this other stuff about rent, utilities? I'll just put down wages. I'll be done with it. Now, that does not mean that you won't get this credit, but it does mean that you have taken a position that you've used wages for the PPP loan. Could one go back and say, well, yeah, but I had enough to cover the other expenses, so I only use this for 60%. There's supposed to be an election that's made on the forgiveness. A lot of these rules were supposed to come out within 10 days after the enactment of this law, which was December 28th, and nobody believed it was ever going to happen, and we're still waiting for some guidance on how this is going to work. It's still not too late to make things happen, but again, there's some cloudiness in this whole issue. And we talk about common ownership rules applied. We referred to that with the attribution rules, as I was going to call them. So catching up for 2020. So I had cutback, I had government shutdown orders, dentists, restaurants are the ones that come right off the top of my mind thinking about this. And their PPP loan came in sometime in the May, whatever it might be, and they didn't take the credit because no one thought they could get the credit back then. They couldn't have gotten the credit back then, and now you can. So there's going to be a spreadsheet calculation to be done. And it turns out that for the last quarter, that is December of 2020, you can file one amended 941X to basically get a refund of that amount. That's a catch up. I'm going to throw this out to you. I'm very, very skeptical about getting cash refunds from the IRS right now. There's lots of people out there who have filed their returns and still haven't gotten their refunds, including yours truly here. I haven't gotten mine yet either. And the IRS is just messing things up left and right. I might be inspired to say file the 941X and take it as a credit against the next year's payroll quarter that it would apply to. You might actually get the money back quicker that way. Okay, for 2021, January through June, or that July 1st that we were talking about, take the credit against deposits and show it on the payroll return. So therefore, maybe you have credits of $10,000 coming, you had payroll deposits of $4,000, you get a credit against that and pay no withholdings except for state, and you would basically carry your $6,000 forward to the next period. Or if you can't wait, or if you want to hurry up and get it, you don't know if you're going to be able to use all the credit and one payroll quarter, and that's very possible. You can file for a quick advance payment on Form 7200 if the deposits are insufficient to get the entire credit. This is going to be a very common situation. What you're going to need to decide is how quick do you think you're really going to get that $7,200 cash refund? I'm skeptical. I'm almost inclined to say just keep on applying credits unless you just really have to have this cash, in which case I guess you have to do what you have to do. The Form 7200 needs to be filed before the earlier of the filing of the quarterly return or the due date of the payroll return, which means for the first quarter, for you to do a 7200 to get a cash advance on these payments, you'd have to file that no later than April, end of April, or when you file the 941, which means if you're going to ponder this, you might hold off a little bit to file that return. Too late to go back and do anything for 2020 as far as the 7200, because all the payroll reports should have been filed no later than January 1st of 2021. So there you're either going to have to file the amended return, 941X, to get a refund for cash, or basically take the credit, carry it forward. Okay, how to catch up on the credits. This is our recommendation. I've kind of been suggesting it already. We've gone through lots of configurations on this. It's all a function of when's the IRS going to have their act together. They're already sending out tons of notices to people saying, hey, you haven't filed your tax returns, when they all have. They have checks where they sent money in. They have receipts. They're in disarray. So anyway, one can file an amended 941X to claim the refund, as we talked about, or they can file that and take the 941 and apply the credit to next year's taxes. Again, you can't get an advance payment on Form 7200 for 2020. So you can see there's a discussion to be had with us, or if someone else is handling your affairs, however it is. There's a little bit of a labyrinth of rules to figure out what's going to be the best way. This is where we spent quite a bit of time on this topic already. All right, payroll processing services. I'm going to be very blunt here. I'm very unimpressed with some of the payroll providers that we've discussed this with. You would think that since this rule existed back in 2020, that they would kind of have this thing down, even though the credit is more for 2021. What we have found is it seems like a lot of these people were caught off guard. Large ones, small ones, software providers, if you're doing your own payroll and you're buying the software from somewhere, they all seem to be in various states of disarray. Some of them were unable to even start doing this until the end of January. So if you had a $5,000 credit coming, they couldn't even do it for you. You had to go pay your $5,000 deposits because they weren't ready for it. Other things we found is the reports that they give you don't always agree with the credit, and some of them don't even have a solution for the credit carry forwards. And some don't do the 7200, and they ask if you do it, you send it to them. I'm skeptical as to what they're going to do with that information. So what's my recommendation? I'm not going to try to name any particular ones, what this means. You have a dilemma. You're using an outside payroll service. You want their records to reflect W-2s, unemployments, and so do you start pulling things away from them to do it, and then they claim that you didn't give them information, and next thing you know, your payroll records at the end of the year are all messed up. So I believe in the accountability, keeping things in one place. So in my opinion, you should try to keep this as much as you can with your payroll provider, even though my concern is what I've been saying. It just means you need to be alert and provide some supervision. We'll be doing this for our clients who want us to do it. We will be actually contacting the different payroll providers and specifically asking what they're doing, and we'll be, in effect, auditing the reports as the payroll is done to follow this and make sure it's actually done. Do not assume that the credit and the carry forward is correct. Don't assume that if your credit's $15,000, your payroll deposit's $5,000, and you think there's a $10,000 credit carry forward to use against future payroll deposits. Do not assume that is correct. We've already found reports that they're incorrect. So stay on top of this, or have someone independent who knows what they're doing. Stay on top and verify that you get all the credit that you actually deserve. Okay, if all this looks good, then we can discuss how much it appears you can get back. We'll need to talk with your payroll provider. So we're talking about if you want us to get involved in this. We're certainly willing to do this. You might want to do it yourself. Maybe have someone else do it. I'm just giving the caveats of what to do. So the first thing is this, and Tina's the one who actually put this checklist here together for us. Call us up and just have a general discussion. We can probably rule out in less than 15 minutes that you're not going to get the credit. In which case, it was a nice discussion we talked about, and we didn't spend lots of time spending time on this thing. Now, we continue talking with you, and it's starting to look good. You're a dentist, or you're a restaurant. You're another type of business that was subject to some type of shutdown order in California, even though you're an Arizona-based business. Whatever our discussions might go, you might decide, I need to go look up when the shutdown orders were. I'm not really sure. So back to 2019. We will talk about the shutdown orders they're affecting. We'll talk about the reductions, and we'll get your sense as to what do you think. Some people say, oh, shutdown orders killed us, or no, we didn't have a shutdown order and our volume kept on going. We were pretty pleased with what's going on. Well, those answers tell me what to do next. And so if number 2 looks good, then we're going to start asking you for some information. And here's the kind of things we're going to be asking about. Why don't you send us quarter by quarter what your gross receipts were for 2019, 20, And what do you think it's going to be for 2021? That'd be one question. When we look at that, we'll say, looks like we maybe have a live wire here. Now we'll start saying, let's get into more details. Let us know what your payroll was, exclusive of those related parties. Let us know what that is, quarter by quarter. Of course, for the shutdown, we'll have to look at March 12th and beyond, and we'll go through each of those. We'll ask you questions about your PPP loan, but what we'll do is we'll build on this, because what we're trying to do is not have anyone waste a lot of time until we rule out the low-hanging fruit and we get to where we think we actually have something to do this. Now, this will take care of us for 2020. We will need to talk about 2021. Some people are already telling me this, first of all, no one seems to have a shutdown order for 2021 at this point. But on the volume reduction, which is 20%, of the first and second quarter of 2021 compared to 2019, nobody knows. All you can do is just guess. Well, if you know that for sure you're going to be under the 20% threshold, then we need to start talking with you about talking with your payroll provider. We may need to call them up to find out and coordinate how you're actually going to get the credit. So you can see, if you're following this to some degree, if you're following 50%, you're doing pretty good. We don't want to spend your wheels and your dollars having us go on a wild goose chase if we can find out quickly up front whether you're even going to qualify. So clients or someone else who might want us to help, give us a call. In fact, I'm going to suggest you call Kit, who will basically schedule something with either Tina or myself to go through the first phase of these discussions. Okay, checklist that we'll be using: were your operations fully or partially suspended? When was a shutdown period? Did you have a reduction in gross receipts? These are the things that is a continuation of the checklist that Tina put together. Okay, caveats. We can start doing the analysis. We can't guarantee that when we're done with the whole analysis that we're going to find you a sizable refund. We have had, there are some big ones we've gotten, but we can go through this and find out, well, the way your PPP loan worked, the way your gross receipts went, and so on and so on, there really isn't much there to be had. And every step is a decision. Do you still want to continue on this thing? If we're telling you we think it's a big refund, the answer is yes. But let's face it, if I was going to tell you it's $1,000 refund, by the time you do all the paperwork and stuff, it's probably not happened. I can't guarantee any of this until we actually get into the weeds and take a look at it. But again, we can usually quickly rule it out in a 15-minute phone call. So therefore, there could be some sizable refunds, and we hope that they will be for the people who need them. So give Kit a call, who she'll give you her number, and she will get you scheduled with either Tina or myself to at least go through the first phase. Okay, Tina, thanks for being part of this and your checklist. And Kit, I'm going to turn it back over to you.
Thank you, Chuck.
Great, thanks. Thank you to everyone watching, and thanks Chuck and Tina for this informative presentation. If you would like to set up a call with Chuck, please call us at 602-678-7067. We also invite you to visit our website at www.rcthornton.com and watch our other webinar recordings from our speaker series page. Please let us know if you would like to collaborate on a webinar with Chuck regarding your topic. We would love to work with you. Thanks again and have a great day.